Why don't you start by explaining who you are and why you're doing this?
Sure. So my name's Carlisle. I'm the CEO and broker of Full Circle Realty. And Morris is my brother-in-law. And in a second, I'll let you introduce yourself. We very often sit around chatting about this stuff on a regular basis, just our general opinions on real estate in Halifax, stock market, and so on. And we just thought it'd be a great opportunity to sit down and chat about it all. So, Morris, if you want to tell us a little bit about yourself, obviously you are a wealth manager at RBC, but maybe if you want to give us a little bit of background on that and also previously in your other careers.
Yeah, so we've just done this so many times, kind of like you said, in the backyard, and every now and then there's a little nugget where we're like, God, that'd be kind of nice if somebody else heard that. So sorry if we're having to wade through all the nonsense, but there might be a nugget or two here. Before moving to RBC Dominion Securities, I was with another bank doing real estate construction financing. So we dealt with clients all across Atlantic Canada and got a pretty decent idea of what was happening in the market. And then I moved over to the wealth management side, dealing with the asset side of the balance sheet rather than the liability side. And so we kind of started these conversations from the perspective of real estate, and then are transitioning over towards how you manage your more comprehensive wealth, which is a good term that means nothing.
Right, yes, that is true.
So when Carlisle kind of said this might be a good idea, I jumped at the opportunity because, who doesn't love getting in front of a camera and documenting exactly the stupid things that you
Most people. I'm terrified. I think
I am not comfortable.
We've both chatted about it. We're both terrified, but hopefully, we get better at it, and I'm sure it'll be a bit of a bumpy ride in the beginning, but it'll be fun, and we're in this together.
This might be the only one.
But very well could be the only one. We probably can still return the lights that we've purchased for this. Keep the microphone. You never know.
You never know.
Okay, so I'm just trying to think so we really have 4 topics that we want to chat about during this. So we have, we'll start with inflation. I mean, the title of this is really inflation and rising interest rates on the Halifax real estate market, right? That's the general topic, what we're talking about. So we're going to talk about inflation, interest rates, market downturn, and Halifax in general in the real estate market.
Yeah.
So really, inflation to me is above my pay grade to have a knowledge on. So hopefully you know some stuff about it. And so I guess if you just want to start talking about inflation, and then we can sort of talk about the ripple effects of it.
Central banks want to maintain a low, steady set of inflationary pressures. After the housing crisis in 2008, 2009, we saw a massive quantitative easing, which means that the government's flooding money into the economy to get everything going, to invigorate the economy. So fast forward a little bit, they were starting to pull back on those measures, and then in 2020, everybody knows that we had a massive pandemic, and we saw interest rates go down to almost zero. I mean, from your perspective as a real estate professional, getting a mortgage was never cheaper. We had loads of money and people going into the market to buy anything and everything they could, and that's what kept the economy going through the pandemic. Now that the pandemic is not over, but the economy is starting to reopen, we see the central bank starting to tighten their fiscal and monetary policies and making sure that they've got levers to pull in the case of the next financial crisis. With that, we're seeing inflation kind of take off. So we see gas prices at was it $2.20 or something? It's crazy. It's so expensive.
8 months ago, a gas tank for me was $60. Now it's $110.
Yeah,
right.
It's
and crazy.
Food prices are going up, and a lot of that has to deal with geopolitical stuff, like the Russia-Ukraine conflict. There's a whole bunch of things that are going into the these impacts that people are seeing that directly impacting their wallets. So, in order to deal with that, the central banks are starting to raise interest rates, and that's kind of a widespread dampener that goes across the entire economy, especially real estate.
Yeah.
You guys see that in mortgage rates because it's a direct input. You guys, a person buying a house at the first of the pandemic relative to now, the difference in their mortgage payments is crazy.
Right? If someone, and these numbers aren't going to be exact, but for argument's sake, 8 months ago, someone was borrowing at, 2%, and let's say their mortgage was $1,000. now that mortgage payment would be $2,000, roughly speaking, right? You're looking at 4% and stuff like that. So it does affect things greatly because it directly correlates with how much someone can afford to pay for a property. And there's certainly a small disconnect on people looking to sell their properties and what the market's done over the last 2 years with 25% year over year increasing. And now with the interest rates, it's really starting to stabilize things. We've been chatting in-house at our company for three or 4 months now about how drastically this is going to affect the marketplace. But this is why we're doing this, is to actually give our opinion on sort of what's happening. But it's very interesting, and historically it's been this way as well. You look at the larger city cores, when stuff like this happens, it affects the markets quicker there. And as an example, you're seeing negative pricing happen in places like Toronto and so on, but we're still stable. Like, we haven't gone down. We don't have a crystal ball. We can't tell the future. I do foresee that the market will stabilize. I don't foresee it going down, but I do think in the larger city cores, I think there's a lot of other layers to this too, which I'm sure we could tap into. But even in the sense of when stuff like this does happen, we're still affordable in comparison to these larger city cores. So when stuff's hitting the fan in these bigger city cores, people move out here and it stabilizes us. So it's all very interesting on like a Canada-wide scale of it.
And I think too, like, we've seen Toronto and Vancouver kind of explode in terms of values and pricing for a long time now.
Yeah.
And Halifax, that's still relatively new. Like, we've
yeah.
been in a bubble of just consistent growth.
3% year over year for like 10, 15 years. We've been in a completely different market than the larger city cores. And I think there's in COVID, we talked a lot about like why it's finally happening here. And there's a variety of reasons, from building a beautiful downtown to people realizing that they can move here. If a young professional in Toronto has kids, has an $800,000 condo, and they want to have kids or have kids already, they need more room. They come out here. At the time, you could get a backyard, 3-bedroom, beautiful home for the same price or close there too. So it's just interesting when you really start to dive into all the reasons and working remotely and all these other variables. But it's certainly been like a market where you really have to stay on top of it. The market changed where bidding wars came into play 2 years ago. I always talk, one of my pet peeves is media will run with the over asking stuff, right? Like, this house sold for $250,000 over asking, when in reality, the house is on purpose underpriced to allow the market to decide what the value of that property is through bidding wars and so on. Certainly frustrating. You got to be on, like, if you're representing buyers, you have to know your stuff, and there has to be that trust between you and your client, because without that, it's very hard to like compete to make sure your client doesn't overpay but also secure the property.
Right.
That's me just getting off on a tangent. But so we've touched on inflation. If we wanted to sit here we had a 5-minute max, just so we're on the same page.
We're 5 minutes in on the first.
I bet you were longer than that at this point. But I feel like we could go into Ukraine conversation. There's so many different things that we could go into. We've touched on inflation. I think we've touched on interest rates. We can chat a little bit more about it. I find it a really interesting conversation because it's currently happening. I think, and you can correct me, but I think there were 4 hikes they were planning for the year, 3 or 4, and they've done the first 2, I believe, and the third one, it's interesting to me because I think they're actually looking to raise it.
Yeah, so it might even have a further rise than they were kind of forecasting earlier. And I mean, there's that piece of it too, where the central bank is going to be increasing the cost of funds. And then there's another layer where you've got the federal and provincial governments spending more than running deficit budgets. So we've got multiple layers of government that's impacting this, and it's not only the interest rate, it's the way the government is pushing forward in this as well. So when we see massive deficits on the federal and provincial levels, all that excess capital that's being put into the system is also inflationary.
Yeah.
So while it's kind of a heavy-handed cleaning the table with increasing these interest rates, it's I guess the ripple effect of it is kind of unknown. We've had such a long history of declining rates, increasing real estate value, and everything's just moved in the same direction for so long that when you go back to like the 70s or whatever, when we last saw increase in interest rates, it's not the same economy anymore. So all the models that we've had built and all the algorithms that are running the stock market right now, they haven't really seen something like this. So it's interesting to see how things are reacting, and if it's overreacting and underreacting, and trying to navigate that is a really tough thing to do. And I'm sure for people trying to time the market when they're selling their home or building or commercial properties, it's also not an easy thing to pick your time in the market or the market cycle to figure out when you're going to maximize your price. And I'm sure you have that conversation daily, trying to figure out when that's going to happen.
It's certainly interesting, and like there's no crystal ball, right? I think that the good thing about real estate is it's long-term trends. It's a safe investment. People always need places like a roof over their head, right? So whether it's an investment property or a home, it really is one of those stable items. Obviously, interest rates drastically affect how expensive it is to afford the same sort of price point. But over the long haul, it's always been a strong investment, especially just from a primary residence standpoint. You're not taxing the capital gains, et cetera, et cetera, et cetera. But it's certainly an interesting time with like no really clear how it's going to move forward, right? So it's interesting, and trying to give your clients the right advice when I've been in the industry 10 years. I feel like I'm knowledgeable, but it's really hard to know because it's macroeconomics, right? It's a completely different layer than do you like the color of the walls in this house, right? So yeah, and I think we have chatted about this before. I think you had mentioned this to me, if I put you on the spot, but that the government seems to be more concerned about inflation than the rising interest rates, right? Is that fair to say?
Yeah, I guess the way that they're explaining their future rate hikes seems to put putting a damper on inflation is more important than seeing the market come back to a positive position in the short run. I think that their long-term objective is the right thing, and that they're trying to just get back to that kind of 2 to 3% inflation, so that way everything chugs along at a smooth and even keeled pace. But the road to pulling inflation back from 8% or whatever it is now, it isn't easy, and it's not entirely under the control of interest rates. Like you said, it's a broad sweep impact, but we could increase interest rates to whatever we want. The Russia-Ukraine conflict is still going to have massive impacts on energy and food prices.
Right.
It isn't something that's going to be completely covered by interest rate changes. So trying to have like a silver bullet isn't something
that's possible.
It's on the table. Like there isn't something there that can be like, we need to fix this by pulling this one lever.
Yeah.
It might seem that simple when some people are talking about it, but it's definitely a much more complicated fix than people are giving them credit for.